The crypto-backed loans market isn't just growing, it's exploding. As of July 2025, the total crypto lending landscape has already crossed a mind-blowing $75 billion in active or deployed capital. That's not just numbers. It's proof that crypto lending is becoming one of the fastest-rising pillars of the global financial system. Imagine instant access to cash without selling your crypto or worrying about capital gain tax. Let's gear up for fast-approaching financial system. How these loans work, the top platforms offering them, and, most importantly, whether they fit into your money strategy. Crypto-backed loans are different from traditional secured bank loans in many ways. You can borrow up to a certain percentage of that crypto's value. Your crypto remains yours, but it's locked as security until you repay the loan. The advantages of a crypto-backed loan include no credit checks, 24/7 accessibility, quick approval, and the ability to retain ownership of your digital assets, while also benefiting from price appreciation during the loan period. Generally, crypto-backed loans allow you to borrow a higher loan-to-value ratio compared to traditional secured loans. Depending on your jurisdiction and individual circumstances, a crypto-backed loan may provide tax benefits, such as interest deductions or other incentives. Downside of taking a crypto-backed loan includes liquidation risk, volatility exposure, high lending fees and rates, margin calls, liquidation risks based on market volatility, regulatory shifts that could restrict lending or raise costs. No ownership protection. Once pledged, your coins are locked and can't be used or sold until the loan is repaid. Platform risk. CeFi and DeFi lending platforms are vulnerable to hacks, insolvency, or sudden regulatory crackdowns, which can put your collateral in danger. On the flip side, the rapid growth of both lending ecosystems is driving new regulations aimed at boosting trust, attracting more capital, and making the space safer for both institutions and everyday users. There are two main categories of crypto-backed loans: CeFi and DeFi. Next, we have CeFi, or centralized finance. These platforms are like traditional financial institutions. They take custody of your collateral and offer user-friendly interfaces along with customer support. Platforms like Figure, Ledn, and Nexo fall under this category. While these platforms often require credit checks and might charge higher fees, they provide a sense of security and simplicity that many users appreciate. DeFi loans operate through smart contracts on platforms like Aave, Compound, or MakerDAO. You maintain control of your private keys. No credit checks required. Rates can be more volatile and market-driven. Global accessibility without geographic restrictions, but you need technical knowledge to navigate safely. So which one should you choose? It depends on your comfort level with technology and the level of control you desire. Now you're thinking, great, tell me the numbers. How much interest will I pay? Unfortunately, there's no one-size-fits-all answer. Interest rates depend on several factors, including the platform, loan term, collateral type, and even market conditions. It's important to recognize that a longer loan term or a larger loan will undoubtedly result in higher interest rates. Fees such as origination, conversion, price slippage, penalties, and other charges unique to the situation and platform can accumulate quickly. Always read the fine print. Do your homework before locking up your assets, and never forget, volatility is the heartbeat of the crypto market, and it beats faster than you think. Finally, let's address the elephant in the room: risk. Crypto-backed loans are not without risk. The value of your collateral can fluctuate, and if it drops too much, you might face a margin call. This means you will need to add more collateral to bring your loan-to-value ratio back to the required level. Failure to do so could trigger liquidation, where the platform sells your collateral to recoup its loan. That's why it's crucial to have a repayment plan and monitor your loan closely. By understanding the mechanics, interest rates, fees, and most importantly, the risks involved, you can make a well-informed decision about whether crypto-backed loans align with your financial strategy. Do you have experience with crypto-backed loans? Feel free to share your thoughts in the comments below. And if you enjoyed this video, hit that like button and subscribe for more insightful content. Thanks for watching. Until next time.